Hey guys, what's up? This is Andrew for TRENDLINES.com. So as usual, I'm here to make some technical analysis, and as you know, I have now more time. So today I want to try something new. I want to make a double update, guys, on GameStop and AMC in the same video. So let's get into it. Alright guys, so let's start with AMC. So yesterday was actually quite a bloody day for both stocks. So I'm gonna, as usual, analyze every information that I get from the market. I'm gonna show you what technique or indicator I use to process this information and how I build up my scenarios and choose my preferred one. I'm gonna remind you guys what I told you yesterday for both AMC and GameStop, and we're gonna analyze what happened and what might happen next. So the first thing, on AMC, I told you guys that on the short term, we had this strong support on the 50 period moving average on the hourly time frame. And yesterday, this got broken. All right, guys, it's totally fine. I mean, on the short term, basically we had, kind of different signals going to different directions. So the first signal we had is that we were trading above this 50 period moving average. But the other signal that we had and that I showed you guys as well yesterday was this bearish exaggerated divergence. So on the hourly time frame, guys, all right? The last time I had one on the 30 minutes time frame here. So let me first show you what is an exaggerated bearish divergence quickly. So it's this one, okay? And it's very different from a bull flag. So here in this situation, the market is actually failing to make a new high with the momentum indicator, for example, the MACD going lower. So it's exactly what we're having here. The market is failing to make a new high. It's trying to make a new high. It's actually making a flat, but the momentum indicator is going lower. And this is very different from a bull flag, because in a bull flag, actually, the market is going lower. It's consolidating. So if you had something like this, guys, it's funny, but actually, if AMC traded lower 2 days ago, it would have been more bullish than AMC going at 64 and failing to make a new high, because this makes it a divergence. And here, for example, you can see that the MACD is going lower, from here to here, and the market is going lower as well. This is what we call a consolidation period. This is a bull flag, all right? Bull flag can be done with flat, zigzags, or triangles. But each time here you have lower highs with the MACD going lower. In the kind of a divergence, in the situation of a divergence, you don't have this lower highs. If we had this, once again, guys, this would have been more bullish. But we had this, which is a bearish exaggerated divergence, which was what, for me, put some pressure on the price action. Basically, the bears were more confident yesterday, and they made their point because AMC closed on the day, I think 6% down. But guys, once again, let me remind you the big picture. So let me just finish here on this bearish, so hidden divergence that got its impact on the price action. And my preferred scenario was we go right away here. But, I had an alternative scenario with quite a high probability as well. That is actually the one that is playing out, and that is, AMC just going lower. So for me, we could go as low as 48, as I told you. And my scenario that is here, a 1-2, would still remain intact. So to know that, guys, I just, look at the fibs. And as long as we are above the 61.8%, we are fine. We could go as low as 78.6%. And it still could be a 1-2, but most of the 1-2 we're having in the third wave, usually the second wave doesn't go below the 61.8% retracement level. So this is, for me, the level above which everything is totally fine. So yeah, once again, we kind of have the feeling that yesterday the bears were in control. But guys, let me remind you that we are trading at 55, that we are coming from, levels around 5 to 10. Few months ago. And trust me that, the bears remember this because they lost a lot of money during this whole move up. So the bears are here wounded. They're actually deeply wounded. And when the price action is just retracing like this, it's actually good. We're gonna go to take some more liquidity sitting at these levels. There are a lot of people that are just waiting to buy the dip on AMC. And if they do, maybe it would be the time, to just win one more battle and the bulls could be in control again. So what I mean is that on the long term, bulls are totally in control. This is what actually I see from my technical analysis. And here, once again, this exaggerated bearish divergence on the hourly time frame, I think would still have some impact, maybe on tomorrow's, like on Tuesday's trading session. So we might go to the 48 level. This wouldn't be that surprising for me. Now my scenario is here, 1, 2, 3, 4, 5, same. ABC, so I told you guys, either my ABC is a small ABC here, and this is a 1, 2. So this was like this. Or here we fail to actually go higher right away, and it's just a bit an ABC that is just lasting a bit longer, but it's still an ABC. And once again, the C wave could go like even here to 48. It would be totally fine for me. So I don't have here a very precise scenario. Either we bounce back right away, but my preferred scenario is actually we go a bit lower here, we take some fresh liquidity, and we just reload, guys, because this liquidity is the weapons that, you know, bulls, you guys, the apes are using against the hedge funds, the market makers that are actually shorting this stock. And sometimes it's good to go at a bit lower level to get this fresh liquidity and to use it against the bears. So once again, this is looking totally fine for me. Okay, now I want to talk about GameStop. So here, what do we have, guys? So once again, let me remind you what I said yesterday. So in my yesterday's video, guys, I told you that I was here spotting, you know, kind of exaggerated bullish divergence. So it was actually the opposite of what I was seeing on AMC. So it's the same one, guys. It's this one. But once again, you know, this exaggerated divergence, they are a bit weaker than the normal divergences because the price action is actually not making a new low. So here, let me remind you what it was. So I was seeing here the market making, you know, not able to make a new low with the MACD going higher. So this for me was looking bullish, and I was actually, you know, kind of seeing this wedge pattern forming here. And I wanted to see a breakout on the upside. Unfortunately, GameStop lost how much? 6%, guys. You know, it's not big moves, like seriously. Those kind of moves, guys, it's like, you know, let me show you just quickly the volatility, guys, of GameStop. All right, so this is the option open interest. I have here all the information about the options. And you can see that, for example, on the 500 strike, for example, in the July maturity, the volatility is at 240, guys. All right, so in terms of daily move, you just divide this by 16. And it's like around 15% of daily move, guys. So when GameStop is moving by 6%, and especially look at the volumes, guys, the volumes are, you know, the weaker volume we had for a very long time. You know, I only like 5 million shares traded yesterday. You can see it's here, guys. It's very low volume. We almost never have so small volumes, especially on a, you know, apparently strong bearish day. Guys, this was, you know, this is a strong bearish day. Okay, we can see more. We're fine. I mean, if this is the best they can do, it's fine. It's totally fine. And guys, I have this exaggerated bearish divergence. Now it's not exaggerated. It's, you know, let me get rid of that. So I'm going to show you my new scenario. But right now, guys, the market is making new lows, lower lows. That's very clear for me. Lower lows. And look at the MACD. So we don't have it on the 4 hours time frame, but look at the hourly time frame. So here market still making lower lows, and the MACD here, guys, the MACD making higher lows. So this is a bullish regular divergence. So now we have it. So what does it mean? It means that yesterday was a day won by the bears, but guys, the victory is very small, very tiny, and we can read it in the momentum, because even if they made a new low, they made it with a higher momentum. So that's why the new low is actually not deep at all. And, you know, you can see it in the volumes. You can see in the daily performance, 6% compared to 14% of average daily move when you look at the option market. And you can see it in the momentum indicator. So for me, once again, same answer here. It doesn't change anything to what I was saying, guys, before. It would just maybe take a little bit more time. So let's analyze where we actually got a reaction here. So we got the reaction around the 200 level. And it's funny, guys, to actually notice that, you know, I've always told you when you have a breakout, the breakout is usually retested, you know, 90% of the time. So here we go, guys. This is the breakout level that has just been retested yesterday. And I can tell you that there were a lot of people waiting here to buy. and I'm not sure they bought yesterday. I think they did. Look, I wanted to show you something very interesting. If you go on a 5 minutes time frame, look at the volume. So this is yesterday. Okay, so yesterday started here, and you can see that the higher volume of the day was here. So basically when we went through the 200 level. Why? Interesting. Because both you're having a lot of stop losses, a lot of maybe bullish investors that said, okay, I'm going to buy some shares at 215, but I'm going to stop my position if GameStop trades below 200, maybe. But if you have this high volume here, when we go strongly down, guys, you can see basically GameStop was, going lower, and then suddenly, bam, we have this massive quantity of shares that is sold at the 200 level. Probably it was when we started to trade just below the 200 level, and we still didn't go lower. The 5 minutes candle that is coming just right after the one that broke the 200 level is actually very bullish. What does it mean? It means that we have a lot of buyers here, and even if you have this strong volume that is trying to go through the level, the buying power is still strong enough to right away make it bounce back. So okay, it went then after below this, and we closed slightly below this, but basically this is just a consolidation area around the 200 level. So this is once again showing me that even in weekdays like yesterday, low volumes and the buying power is actually here, guys, is actually here, and that's why the price action actually stayed that high. I'm sorry, 6% move down is very small for a stock like GameStop, especially when we're having, this kind of sentiment that is shifting. We've been consolidating here for what, 1 week, and we broke, the level, the 215 level, roughly the 210 level. We broke it, but we broke it with a very small intensity. Actually, we didn't go that low, and the price action was actually, to me, showing quite bullish signs here. So let me remind you now my scenario, guys. So like I said, we have now here a clear bullish regular divergence, guys, on the hourly time frame. We don't have it on the 4 hours, so we have it on the hourly time frame. So this means that probably we're gonna have some bullishness coming back tomorrow, like on Tuesday and Wednesday session. In terms of levels, let's have a look at where we are correcting. So we broke the 61.8%. Okay, 215 level got definitely broken on the daily time frame, on the 4 hours time frame as well. So once again, I don't like this area. This is something I need to tell you guys. I don't like this area. Everything between 78.6 and 61.8% is an area that, to me, where bears are actually, more in control. That's why they manage here to break the 210 level. But once again, the bulls flex their muscles here, definitely, and we can see some bullish momentum coming back here with the MACD trading higher. So I don't really like to be in this area. I don't think we're going to stay here very long. So my preferred scenario is simple, guys, is that we bounce back right away and we do 1, 2, 3, 4, 5. My alternative scenario is that here we don't only correct to the 200 level, but the next support level is here, guys, the top of wave 1. If you want to find the support and resistance levels, after a strong move up like this, let me remind you guys, we are here talking about 6% move down. All right, but we took 150%, there was 150% move up, guys, the past month. So once again, this is totally normal to consolidate, and it's fine for me. If you want to find the support level after the strong move up, you just check at the highs and the lows created by the preceding Elliott wave counting that we have in here. So here, the top of the first wave is 190. So this is our next support level. So this is my alternative scenario. Either we bounce back right away or we go slightly lower. But guys, this would still be a bullish regular divergence. I'm sure of this. And we would still do the 1, 2, 3, 4, 5 that is coming later. So basically, my longer term scenario is totally unchanged. We are bullish here. Let me have a look quickly at the option market data, guys. So here, guys, same thing. So we were at 215. So we had 1 billion USD in synthetic short. Right now we are at 200. So we're having 800 million, guys. This option distribution is still looking very bullish to me. Same for AMC, guys. There is nothing very new here today. For AMC, you can see that we're having 10% of synthetic short interest. The 145 strike call is keeping growing. So same on GameStop, guys. That 100 strike is like, you know, the one that is consuming like the more exposure here on this option market. And the last thing I wanted to show you is when you try to understand what created this move down yesterday on GameStop, because, you know, all the broad market like the S&P 500, the Nasdaq, they rebounded actually, and they made some strong moves up. So you're wondering why GameStop and AMC went down. So you just, you know, I usually go on Yahoo Finance. It's quite a good website to find the news. And I was expecting to find a lot of bearish news, but guys, the first thing I find is actually this article: GameStop flounders, but long-term catalysts remain intact. So low volume, low conviction. All right, I agree with that. Not a lot of shares trading yesterday. And, you know, actually GameStop is now entering in a lot of ETFs. You know, a lot of like asset managers, they want to use the fact that a lot of investors are attracted to stock like GameStop, and they just put it in the ETF. In their ETF, they actively manage. So what is it creating? It's actually creating some more bullish momentum once again, because when they buy the ETF, or any investor buys the ETF, they need to replicate their ETF strategy on the market by buying some GameStop shares. So this is actually bullish, and this is coming on a bearish day. So interesting. This is another divergence, guys. And the biggest divergence I find in the news is actually, you know, the one that I have here. So retail investor stock buying boom of 2021 is just getting started. Goldman Sachs. Interesting. And it's actually funny to see. So they basically explain, you know, that people, they invest more and more in the equity market. They're basically saying here, any signs of a sustained increase in inflation would favor equities over bond or cash. So the money is here because we printed a lot of money, you know, to tackle the COVID crisis. And this money is not going to the bond market, because if the inflation is starting to grow, you know, you're better off having some return coming from the equity market than some very close to zero interest rates that you could have by investing on the bond market. So this is one of the reasons with this, you know, inflation that is now, you know, growing. We can feel it because of all the money that has been flooded into the economy. So this makes sense. But the investors are very bullish, and they invest on the equity market. And guys, it's funny to see. You can go and check my videos. I posted, I think, like 3 or 4 months ago, when I was telling you that Nasdaq and the S&P 500 are gonna enter the biggest bubble. This article is basically saying the same thing. And, you know, they say it like, you know, 3 or 4 months after me, because probably they have more data, but I was already seeing this in my technical analysis when the S&P 500 broke the 3,800 level and the Nasdaq broke the 12,000 level. So actually there were already some early signs that all this money that is flooded into the economy will go to the stock market and will create a bubble. So I think those bubbles, they will keep happening. That's why I'm so bullish on GameStop and AMC. Goldman Sachs is as well. And trust me that if there is 200 million shares trading every day on AMC, it's not only the apes community, you know, buying and selling, you know, there are more people, more investors involved in this trade. And Goldman Sachs is, I think, one of them, because they know that this is a way to make some quick cash. So they are in the trade. I'm not going to be always 100% right. For those who are following my channel for some time, you know that most of the time I'm right, you know, like we can say 80% of the time, but I remind you guys that trading is about probabilities and expected gains. So, you know, if your risk reward is just high enough, you can be wrong some of the times. And here, yesterday, we had a bearish day, but we're going to have some more bullishness coming back in the game. So that's it for me. I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. See you guys.